Business owners in Raleigh build their business with intention. I'm your host, Adam Gross.
I'm Gordon.
And today we have a very special guest of Dash Home Loans, Andy Borter. Andy, welcome.
Good morning, guys. Thanks for having me.
The dashing Andy Borter with Dash Home Loans. Very excited. Excited to have you here, Andy. Thank you for being here.
Happy to be here.
Awesome. Yeah. Well, tell us a little bit about your background before you got into what you're doing now. You know, what led you to Dash Home Loans over the course of your career?
Yeah, so I had been in the mortgage industry since 1993, and while technology has certainly made changed the mortgage industry a great deal, one thing that really hasn't changed when people get a home is that typically they talk to a loan officer, and then they maybe talk to an admin person, and then it goes to a processor. And that structure, even though technology's been put into it, is really in play with almost every mortgage company.
Okay.
And when we formed Dash,
Phones off.
When we formed Dash, we wanted to come up with a structure that was more efficient and better for our customer.
Yeah.
So that they didn't get handed off between the departments. Another reason why we formed Dash is, as much as we dislike the online lender, they're not going anywhere.
Right.
And they offer a more competitive rate, and we needed to have a more competitive price to give our client. There were just too many times we were doing the work, giving the roadmap financing, only to lose it at the last moment because they were shopping online.
Sure.
So we needed to find a way to sharpen the rate. And the third one we needed to be able to do was we needed to still have some resources left to be more of an advocate for our community, for our agent partners, just to invest into the areas that we live and want to brand ourselves within our communities. And when we formed Dash, it was to do those, which is tough, right? Because we're not devoid of economics, to offer a better price, better service, and have some resources left over.
Sure.
But we found that by eliminating that traditional loan officer, assistant, processor, and having the borrower go to one mortgage coach, it actually saved about 1% per deal.
Wow.
And with that 1%, not in rate, in fees, and
Sure.
that 1%, what we did is we put a half of it into the rate, which lowered our rate by about an eighth over where it was previously. Close to the online lenders, but it's with our value prop and our customer service, we're happy with where that is. Usually if you can get within an eighth in rate, people don't move.
I mean, that's pretty brilliant. So you're offering close to the online kind of just cookie cutter rates, but with some actual personalized service, some local service. Right?
Yeah. And our mortgage coaches, many of the online lenders, they're going to close 20, 25, 30 units a month. We want them and making not industry pay typically.
Right.
Our mortgage coaches are going to close 6, 7 units a month and be well compensated, and they're the single point of contact for the borrower. So we really like that model. And like the big trick is we eliminated that loan officer position.
Yeah.
And I'm a loan officer by trade, and it's been a great line of work, but we are some of the most overpaid people in any industry.
It's so interesting.
So it's time to be.
So let's step into this a little bit, because you've kind of recreated the mortgage game, right? And that's takes some high level thinking. It takes knowledge. You didn't just start at that point. Tell us a little bit about your background before you got in the mortgage business, and how did you get to that point? How did you find out that was a thing you needed to do to change it?
The mortgage industry?
Yeah, like what were you doing before that? Have you always been in that?
So I grew up a State Department kid.
Right.
We moved every 2 to 4 years.
Yeah, your dad had like a really interesting job, it sounded like, too, right?
Well, we always kind of kid around like he was CIA. But
right, you don't know.
Yeah.
We don't know, right?
Yeah, I think he likes to act like he was.
Gotcha.
But overseas or the D.C. area. Mm-hmm. And so my life as, growing up, I was very close with my family because it was just kind of us.
Sure.
And it gave me some, prior to the start of the podcast, you had mentioned that I kind of watch and I kind of make conversations.
You're
with people.
observant. You're very observant.
Yeah, and then I kind of try to be strategic.
I called you a silent assassin.
Yeah. And it kind of goes back to, growing up, right? Like if you go to the new school in Mexico or Pakistan or places like that, if you don't want to get beat up, you just sit back and watch and observe for a little bit until you feel like you understand what's going on. So it's kind of played into my, who I am today.
Yeah.
Was in the DC area, went to college, not a very good student. Never was a good student. No, I actually
not
failed
pulling
out of
straight
college
A's?
twice.
Did you go to George Mason? Is that right?
I did. I eventually graduated, but I remember when I came home with the report card that was like 3 F's, a D, and an A in Spanish, and I was basically fluent in Spanish after living in Mexico. And my dad was like, "Get a job or join the Army." And I quickly got a job. And
You didn't want to join the Army, huh?
Well, it was right there during Desert Storm. It didn't seem like a good idea to me. Got a job working at a bank, and that was a really great job for me because this was back when people would go to the bank on paydays, and you would get to learn how money works and who's making the money and how to have financial conversations with people. And I really enjoyed that.
Again, kind of sitting back and watching how the system works. This might be the thread. We'll see.
Yeah. So it was good, and you also got to build relationships with people.
Yeah.
And when I did graduate, there was a mortgage company, and they said, "We're hiring upstairs." And I'm like, "I need a job." So I went in, only interview, applied, got the job. And
Crazy.
It was doing the secondary marketing, which was kind of coming up with the daily sheets and working with investor relationships. And that was a great job, but it didn't really have the growth opportunity that I was looking for.
Okay.
And the growth opportunity that I was looking for in the mortgage industry really comes from sales. And if you're going to do sales, you have to start thinking about where you want to live because you start building that sphere. And then took a tour of the South, picked Raleigh, moved here 6 months later, and started as a loan officer.
Is that the same as an originator?
Yeah.
Is that what that term means? Because you're sort of originating the business, right?
That's right.
Got it.
Different places will call it a different title, but loan originator, loan officer.
So you were working for the same bank when you moved here, or a different?
No, a different company.
Who did you start with here?
It was a small company, and my very first week, the manager was going to train me in how to do sales. Even though I knew some things, I never sold anything. And then it was me, another lady who was just as new as I was, and at 1 week after we started, the manager quit, stole all the manuals, and that was where our guidelines were because they weren't online, and he took the petty cash and he took everything. Wow. And so we're like, uh-oh. And so we it was a year before I closed my first loan, so
Crazy.
It was a painful year.
Yeah. So tell us about that experience of learning sales then, because that's something we've been through. A lot of people that are probably watching and listening have been through. What was your experience of learning how to sell?
And just getting thrown into it.
Yeah.
And the guy who had the foundation set up in the business leaves.
Right.
Yeah. So it's what I would say is a bad plan will work over time if you execute it.
Okay.
So I was afraid to talk to people. I was young and I looked 7-8 years younger than I was.
Still look fresh, Andy.
That's really
Still look fresh.
Yeah,
you got all your hair. It's impressive.
I was
Well, it pays
very
off when you're
concerned.
older.
And my name is David Andrew Borter, and I would put David Andrew Borter on my flyers, and I passed out 1,300 flyers a day. I just went to every real estate office and passed out flyers every day. And remember, my boss called me in one day. He goes, "Andy, there's no agent who wants to work with a David Andrew Borter. They want to work with an Andy."
Got it.
So it's
It sounds more friendly.
Yeah.
Less,
he was right.
Maybe it sounds a little less pretentious to some people. Some people don't like the 3-name thing. They don't that's a thing.
Especially if it's
Like some kid dropping off.
Yeah, it just seems like it's
David Andrew,
obviously like you're trying to compensate for something.
Got
Just
it.
be yourself.
Got it. And that's you, Andy.
Yeah. So it's so I did that, and eventually I got my first deal. Then you get your second, and then you work hard and you slowly grow it.
Nice.
And then those relationships would be able. Some of those blossomed, and I got to the point where my business was too much for the company that I was at. So I joined a company called Irwin Mortgage, and that was a really great place. And I learned how to be a top producer there from other people.
Nice.
And after working there for 5 years, I opened up my own branch. And
Of
when I
that
said
business?
Yeah, well, I went to another company.
Okay.
And the way that it works is that it's kind of like the term we use is freedom within a framework. It's not a franchise, but it gives you the ability to run the customer experience the way that you want to manage it. So corporate's there to do HR, programs, benefits, those payroll, those types of things. But from the consumer experience, we get to control like how many processors we have, how many loan officers we have, how we want to pay people, what we want the customer service experience to be.
Okay.
So we liked that control.
Sure.
And we were able to build that, and we had, at 2007, we had around 60 employees, 5-6 offices.
Wow.
But then 2007 hit.
And that was bad for the mortgage industry?
Yeah, it was a little rough. It was
What
a little
happened?
rough.
Tell us
Yeah.
more.
So it
That's tough. That's a tough time, obviously. And so you had to
Yeah.
go, like, did you have to fire people and shed expenses and all kinds of things?
Yeah, we did. Well, but the worst part was you come to work one day and we were doing business as bad as it was on the industry, and it was bad here, but this area was not anywhere near as bad as many areas. So things were slow here, and it was tough, but it wasn't like
Dead.
Florida or Arizona, like the sand states, they say are the ones that get hit the hardest.
Yeah.
But the biggest challenge was you came to work one day and you found out your corporate was out of business.
Like
And
they're
that
just
means
gone.
people
Poof.
that, you have people in the pipeline that are closings, you have employees that no longer have health care or health insurance, and now they have a pre-existing condition. So it was a tough, and
Yeah.
keeping the team together, finding a place, and then trying to find that place where you were hopeful that they wouldn't go out of business too, because we had grown a whole bunch because other places were going out of business.
Sure.
And then
So you had to find another corporate partner.
that's
basically.
right, quickly, yeah.
Yeah.
Very quickly.
Yeah.
And
And so you're in a position where you probably can't control the deal that much. It's just like, hey, whoever.
you can't even take a deal.
Yeah. It's just like,
Yeah.
just do whatever we can,
And then you're trying to pick a place, and so we picked a bank
'Kay.
to go work at because that seems safer than your typical mortgage company.
Yeah.
But then, but the service levels just weren't there.
Got it.
Like when it comes down to it, and other banks could be different, obviously, but the culture wasn't right for us. Like we were just much more customer focused, and we just didn't feel that way from top to bottom within the bank.
Got it.
And I remember trying to be a good employee of the bank and kind of passing the management level down to our staff. And there's a longtime employee that I've worked with since 2002, and she came up to me, she goes, "Andy, I don't think I'm a fit anymore because I know the market's tough, but I think this place is terrible, and I think it's just me because it seems like you like it." And I'm like, I looked at her, I'm like, "No, I don't like it either. Let's go. I don't, we'll
Wow,
we'll
just like that?
The market's not good, but I'd rather be at a better place
Yeah.
and find a way to make it work."
Takes some cojones to make that decision.
Yeah. Well, because we were broke at the time, and then
Right.
whenever you open that up, you basically are signing up to go 3-4 months without a paycheck.
Yeah.
But
God.
assuming the business comes in.
Right.
So but we did it, and that's when we joined our current parent company, Primary Residential Mortgage, and we've
Got
been
it.
there since 2008.
Cool.
Wow.
And so even within the context of Primary Residential, we opened up Dash in 2019.
And it's like an imprint, sort of like a record label has their own imprints.
Yeah,
kind
it's such a different experience. It's such a different process. So we still use Primary Residential's money and the locking and
Right. So
and
they give the
infrastructure.
money to you to give to the client, basically.
That's right.
Okay.
But it's such
Like the bank.
Yeah.
Right.
Yeah, and it is a bank. It's a mortgage bank. So
Right.
we don't do checking, savings, or anything like that. All we do are mortgages, and I like it from top to bottom. We're focused on mortgages. So if that's
Yeah.
all you do, you better be good at it.
Right.
And when with Dash, it's such a different process. It's such a different way of doing business. We wanted to make sure that there was no consumer confusion between other primary residential offices and what we're building. And so it is. We needed to have a different name.
And so through all that, you sort of saw the entire process, right? You observed how the mortgage business worked, and then you got to this place where you sort of designed a new role. Is that right?
Yeah.
What did you call it?
We have the different roles are mortgage coaches.
Mortgage coach. That's right.
Yeah.
That seems so interesting. I've never heard that before until I met you, until I've learned about Dash. So I think that is cool that you sort of have this different model that seems to be very customer centric, right?
Very much so. That's how it's designed, to
Got it.
take really great care of the customer and never pass them off, and to do so in a way that we can offer a lower price.
Are you mostly focused on North Carolina?
So we are licensed in North Carolina, South Carolina, Florida, Virginia, and Tennessee. But I would say 75% of our business comes from North Carolina.
What makes this market different? Why do you like being here or not like me? I think you like it here because you kind of said that already.
Yeah,
But like,
yeah.
what is it about this place that makes it special for that type of business?
I think the number one piece was it's where our infrastructure has been.
Sure.
So it's been the easiest way to expand. And when we rolled out Dash Home Loans, there's another role that we have called a sales coordinator, where they are basically out selling our company to the local markets, and they're involved in the local markets because our mortgage coaches could be here in Raleigh or Charlotte, or we have one in Florida.
Yeah.
They can have a virtual relationship with the borrower, but we still want to be part of our communities, kind of going into that third piece.
Sure.
And with that, we have sales coordinators, and they are out working local markets. And this is previously, if I hired a loan officer or a processor or someone like that, we would kind of learn the differences between their company and our company, and then there would probably be a 95% overlap, and you just kind of do the 5% differences.
Mm-hmm.
These are like brand new roles that we're assigning responsibilities and training on, and
Building the
whoever we
plane while it
hire-
flies.
Yeah, so there's like, and a lot of the policies and things we're coming up with, we're learning along the way. We need to tweak here, here, and here. And so right when we opened up Dash, 3-4 months later, the rates fall to, COVID hits, rates go down, and the volume hits levels that we can't even
Right.
handle. No one can handle. Like, we underwrite a loan, it's typically out the same day. At the time, there were some times where we were at 30, 40 days in underwriting. There was
You
just
had so much
business.
That's wild, isn't it?
Yeah, and it's, the whole reason, like, we set up this program, this whole new platform to give our customers an 1/8 veteran rate, and today that's valuable to them, but at the time they just wanted a call back. Whoever could like lock their loan,
Wow.
something that seemed good, they would just do, because it was banks were so overwhelmed.
Wow.
And so when we were going through that, we really didn't focus too much on the sales coordinator roles, because we're like, we can't even handle the volume we have.
Right.
Like, we don't want our first experience to be with new referral partners.
Sure.
So bad, we'll just kind of wait till the rates go up. So we focus mostly on the mortgage coaches, and then as the rates have gone up since the last year, we've been focusing on the sales coordinator
Right.
role, and we're doing that, and we're doing it in the Raleigh and Charlotte market right now. But as we're ready to start expanding to other markets, and that's one of the great things about this is previously, if I wanted to get into the Nashville market, I'd have to find someone to manage the branch and hire loan officers and a processor and sign a lease and
Right.
have a lot of hard costs.
Sure.
Now I can identify a sales coordinator, put them in that market, and work
And then
the
they
branch.
use the infrastructure
Yeah,
that
the
is
existing-
an apparatus that can be anywhere, essentially.
That's right. Yeah. So
That's cool.
the scalability is exciting for us.
Yeah, that's super cool. And so how do you train the sales coordinators? I mean, sales, obviously, you've learned a lot over your years, but you're a businessman, not just a salesperson. Do you have other people that help train them? Do you put them through courses? Do you give them books? How does that work for you?
All of it.
Got it.
So we, and the people that we're hiring, a lot of them just don't even have mortgage experience.
Sure.
We'd like them to have some banking or some, if possible, but sometimes no. And I think it's just a combination of, like, I think people are going to learn from quiet reading, and that's one element. Another one they're going to learn is hands-on training and role playing. And another way is just getting out there and take your lumps.
Mm-hmm.
And I believe in all three.
Yeah.
And I think if you don't get a person out there relatively soon, it almost does damage. They build resistance to going. Day one, an employee will do whatever you say.
Yeah. Yeah, that's
After
true.
3 months, that phone looks a little heavier.
That's
so
a
we
good
like
point.
to kind of build up good habits right out of the gates after 2 or 3 days.
It's a very good point. Are they focused mostly on real estate agents and finding real estate? Because that's a
yeah.
good relationship for you, I'm sure, right?
It is. There's a lot of great ways to build business, and there's a lot of non-agent ways to grow a sphere. But I think working with your real estate agent partners is the most predictable strategy to bring some business in. So when I talk to the sales coordinators, and there's some really great ideas, I'm like, that's great, but right now you have no loans coming in. So I tell you what, once you get to 20 applications a month, then you can start, trying some other things. But let's do what we know works, because our value structure is more evident to real estate agents than the general person, because real estate agents understand the mortgage process better than most people, just because they help so many clients. So
Absolutely.
they tend to understand what we're selling the best, and they probably have the most people to refer.
That makes sense, very much so. And so, Adam, you got a
I was
question?
going to say, can you share a little bit how Dash has scaled since you started it back in, how long has it been now?
It's been almost 4 years.
Yeah. How's it grown since then? Just what you've done so far.
It hasn't really grown that much.
Okay.
Now, what we feel like we've grown has been our infrastructure and our base, and we completely
Right.
believe in what we're doing. But one of the things we're dealing with is we opened up Dash. We went through the refi market where it was more business than you could handle.
Right,
You
it's like
couldn't
right
hire
before
people enough.
2020,
Right.
you opened this thing up.
Yeah, and then right as the refis, and usually after with a refi period, like this was the biggest refi period the industry's ever seen.
Right.
And the mortgage industry grew bigger than it's ever grown.
Right.
So, and then usually when rates go up, it doesn't go up as fast as it has done. This has been the fastest rate increase over the last 12 months than it's ever happened. So what happened is the pie was humongous, and then instead of like a slow gradual shrinking, it just shrunk immediately. And so now you have in an industry that has 7 times more capacity to close loans than there are loans to close.
Right.
And so what
Crazy.
you start running into is like massive margin compression.
Right.
In the last quarter of last year, like the average mortgage company lost around 92 basis points, or around $2,800 on every deal. The first
Wow.
quarter of this year, it got better. I think it was like $1,700 a deal.
They're just losing that one
They're
every
losing
deal
on every
on
deal.
average.
Yeah, and so like it's not only is it that the volume's less, the margin compression is really tight per deal.
And that's
because-
coming from, and it's the same way in the tech world, right? It's the same way in a lot of industries right now.
Yeah.
They hire, build up their infrastructure. They've got set costs now, and you either fire all those people and burn down the building, or you lose a little money for a while. Is that kind of the situation?
Yeah, and I think a lot of these companies are want to get purchased,
Right.
And they feel like the best way to get purchased is to have loans in the system. And if there's loans in the system, people think they can always fix revenue
Right.
if there's activity.
I got you.
Or another part to it is that mortgage companies had made so much money in 2020 and 2021 and part of 2022
Sure.
that they could withstand more pain than they could traditionally.
Right.
So within the mortgage industry, again, no one should feel sorry for mortgage lenders. We cleaned up.
Right. A few years ago, yeah, for sure.
But this is the correction.
Life is good for mortgage business.
Yeah,
but not, it's like, obviously you want to make sure that your industry has a clear path forward, right? And you want to, what dangers, are we still in danger in the mortgage business? I mean, do you think that there's more closings of businesses to come? And I mean, what's the state of the market for the next few years?
I think the general consensus is within the next 6 to 12 months that 40 to 50% of mortgage companies will be either restructured to a different, completely restructured, purchased, or just gone.
Sure.
And so one of the reasons why companies are willing to take losses is because there's a bit of a war of attrition. You're like thinking, if I can just take this pain long enough, and
Right.
if other people go, then the market will fix.
Right.
Got it.
So it's so we're in that process of
It's a forest that
Well,
may need a forest fire.
How big is your company? Like, how many employees do you have in Dash?
We have about 25 employees.
Okay. Well, that's growth, right? Like,
Well-
from when you did 5 years ago.
Yeah. It's we feel like it's wonderful, but but we're trying to be smart about it.
Right.
With the volume being lower, the rates being higher, I
Yeah.
think there's a lot of good things going on.
Mm-hmm.
But right now we are trying to make sure that we're building a really, really strong base.
Yeah.
And once we feel like that crack is there, then we're going to be looking to expand other markets.
That's cool. Do you do any other types of businesses? So you're in the mortgage business, obviously. Are you like a side hustle kind of guy, or you got rentals or anything like that?
Yeah, like we have some Airbnbs and have some commercial properties, but
Cool.
we have people that manage.
Yeah, it's like a
So,
passive thing.
Yeah,
Yeah.
so
That's cool.
we tinker with it.
That's what we all dream of, passive
Yeah.
money, right? You know,
Yeah, but
that's-
some days are more passive than others.
Yeah, I'm sure.
But mortgages are what I get up and do every day.
That's cool. What do you do for fun?
Let's see. I love playing cards for fun.
Yeah?
I like.
Like poker or what kind of games?
Yeah, poker is what I'm playing a lot right now.
Cool.
But like, if I had my druthers, it would be hearts or spades.
Okay. There you
That's
go. You ever
those are
play
my
euchre?
favorite.
Do people?
I have played euchre.
Okay, I didn't know
before,
if people
yeah.
outside of Indiana play euchre.
Yeah, I think some folks in the New York or Pennsylvania area.
Oh,
play
they got it too.
Yeah.
Okay,
Yeah.
there you go.
Cool.
Euchre.
I have played it.
Yeah.
Very cool. What else do you do for fun?
I hang out with my wife, with
Yeah.
my dogs. We're in the process of building a house, and that seems to be a full-time
Congratulations.
job. Yeah, thank
Yeah.
you. Yeah, it's been more of a full-time job than I wanted.
Labor of love, we'll call
Yeah,
it.
yeah.
That's
but,
good.
But it's coming along, so we're excited with that. And
That's cool.
We're picking out a lot of choices when you build a house.
Oh,
that,
yeah. I'm
I
very
never
sure of
really
that.
thought about, like stair designs, and I just go upstairs, But it's a lot of choices.
I gotcha. And then the last thing we always like to talk about is networking, because this is a purpose networking. Obviously we're meeting in Raleigh Founded this morning. We meet on Wednesday mornings. It's 8 a.m. I think is what it's time to start. And then we do the social on Wednesday, the first Wednesday of the month at Yard House, right?
Yeah.
So would love to get maybe Andy Borter's networking tip of the week. Obviously you, like I said, you're kind of an observant silent assassin. What's your networking tip
Focus,
for?
too.
Yeah, like what's your networking tip? What do you think you do well that maybe you could tell other people about?
Well, I think everyone's style can be very different. And I know
Definitely.
for myself, I'm not the macro guy. I like to have one-on-ones and really get to know a person and
Sure.
find out what's going on and try
Yeah.
to find some ways to add value.
Yeah.
Some people, they can do that, but that's not the way. Some people are really great at keeping it light. So it just depends. I think the number one tip is just show up, and when you're at the networking meeting, just meet people in whatever context.
Yeah.
Like if you need to go to the group of people where there's 7 people talking and that's where it's more comfortable, or there's another person sitting at the table by themselves, like just introduce yourself.
Yeah.
Like just
Don't be afraid to dive in.
don't take the work out of networking. Like
Yeah.
you're don't be overly passive about it.
That's good. Don't take the work out of networking.
Yeah.
That's the little title on the
That could be the
thumbnail, I
new
think.
slogan.
Thank you for that. I appreciate that.
I do have a question too.
You
Is
bet.
going on that same vein. If you could go back and talk to 25-year-old Andy, and give him one piece of maybe like a North Star, one piece of like, hey, as long as you go through your career and you focus on this, you'll be okay. What do you think you'd say to him?
For career, right?
Yeah, like
Yeah.
that you can attribute a lot of what you've built to that. You know what I mean?
Yeah. I think like what I would really say is buy more rentals when I'm 25.
Yeah.
Like that's what.
Yeah, because Adam's just asking this for 25-year-old
No.
Adam, basically.
Yeah.
you know?
No, not.
Yeah,
I'm not even
I would say
25.
I wish I bought more
Yeah,
properties.
exactly.
Like
Okay.
I don't think there's a better deal out there than buying rental properties.
Mm-hmm.
Acquire all the property you can. That's a good
It's
tip.
just like if you look at the graph over from a lot of these graphs only go to like 1970 or so. There's been no 5-year period, if you do it in 5-year periods, that homes have lost value on average. Now there was between 2005 and 2005 and 10, they were some
It was a little
graphs show
rough,
it's
yeah.
a little rough,
Yeah.
Right.
but even then it wasn't as bad.
And then it came back up in 11, 12, 13.
And when you buy a property, assume it's going to appreciate 3-4% a year. That's usually a safe number to use. And if it takes 25 or 20% to get put down on the home, so if you buy a $100,000 home, put 20% down, you're going to get 4% appreciation, but that's really 20% appreciation on 20% down.
Interesting.
Because you get appreciation on the whole property, not your down payment.
Right. And you're using someone else's money to pay
You're
for the
using
rest of
someone
it.
else's money, and then you hopefully can rent it and break even, or maybe even make a little extra money. And that doesn't
Right.
even get into tax write-offs or principal pay down. Like it's totally the way I would go back telling my 25-year-old person.
Yeah.
But I think what I'd probably tell my 25-year-old person would be is, and I went through this process between 25 and 30, was just be yourself.
Mm-hmm.
Like don't try to be someone you're not. Don't try to, be yourself. And
Yeah.
you'll find the people that like you
That's great.
and work with you.
That
That's
is
great.
Fantastic advice.
And then, and then the company's built customer centric. right?
Yeah,
So
yeah.
that's like a perfect analogy. Like that's a great image to think about. Like as long as you focus on being you and then you build everything for the customer, then it should be a perfect. There's a lot of synergy.
Yeah, I find if we take good care of our clients and we take, try to be helpful, our phone keeps ringing.
Right.
So it's pretty keep it simple there.
Yeah.
Well, I think a lot of businesses, I know mine does, they take the personality of the people running them, right? So, if you're that type of person, really customer centric, really fun, nice guy,
right,
the business is typically going to do well. If you're kind of a sourpuss, it might not be. So,
yeah,
that's just how it works.
It's true that.
Cool.
And just as we go through different industries, like the things we need to keep in mind is like it's a long race, and that's the thing we can tell someone getting going is, your good days probably aren't as good as you feel like they are at the time. The bad days aren't as good. Like you gotta pace yourself emotionally.
Keep a level head.
Yeah,
it's a marathon.
And kind of tying into what you're doing, Adam, is health is such a humongous part of it.
Yeah.
And it's difficult to have the right mental fortitude without physical health.
Right.
So like keeping a balance on that and starting as young as possible. I really didn't become aware of that until my 40s.
Right.
And I probably could have been more productive 10 years before that if I'd kind of had a little better balance in life.
Yeah.
Interesting. Well, cool. Well, we are out of time. We really appreciate your time,
Thanks,
Andy.
guys.
Thank you. So
Thanks,
where can people find out more about Dash Home Loans?
Just dashhomeloans.com.
Hey,
easy peasy.
It's all right there, and learn about our system.
There we
Love
go.
that.
Well, the dashing Andy Borter from Dash Home Loans. Thank you for joining us today.
Thank you
We
so
really
much.
appreciate you.
Yeah.
Thanks for watching. Thanks for listening. Check this out on Spotify, on iTunes. We are going to be on YouTube at Purpose Podcast Raleigh. Thank you guys so much and hope you have a good day.
Yeah, like, subscribe, and share this with a friend, and invite someone every Wednesday morning at 8 a.m. at Raleigh Gateway.